Should you open a 529 account for your kids? Or should you open a brokerage account? If you are a high earning professional, maybe you're a physician, dentist, veterinarian, attorney, therapist, you probably already know that student loan debt is the rising cost of higher education or the result of the rising cost of higher education. And it can feel like a never ending cycle. You may have your own student loans that you're working on paying down or going towards loan forgiveness with. So you're thinking you don't want your kids straddled with that in the future. Today, we're talking about a question we started to get a lot from clients, even a topic that's been reported by the New York Times more recently. Should I open a 529 plan for my kids or just invest in a regular brokerage account to save for college? Why the differences? Why is there a question between the two? We'll cover the pros and cons of both, some key considerations for your unique situation, and I also want to share some creative ways you can actually use the 529 money as well. It's more flexible than a lot of people may think. I'm Megan, a certified financial planning professional and a certified student loan professional with SLP Wealth. Let's dive in. So why does this conversation even matter? Okay, I don't think I need to preach to the choir, but I'm going to preach a little bit to the choir here to set the stage. Let's talk about why this decision is so important. College tuition is rising faster than inflation. In the past 20 years, college tuition has doubled, making tuition and required fees for the major components of going to school. There are some changes with the big beautiful bill coming out that may limit how much a college can lend in federal student loans, but we're unsure if that's going to change the cost of college. Are they going to reduce the cost of attendance? We don't know, because you could also be borrowing private student loans. That's a whole other topic, whole other video for another day. But point is, cost of attendance has been super fast growing over time. Add in lately some uncertainty about the job market. Many parents may be asking, how do I prepare my kids for college without sabotaging my own financial goals, like paying off my own student loans or saving for my retirement? What if my kids don't want to go to a traditional four-year college, but wants to go to maybe a trade school, or they go to military, or they get a scholarship, a full ride scholarship? This is where a well thought out saving strategy can come in. So option one, a 529 plan or 529 plan. Let's start with the pros and cons of opening one of these guys. A big pro is it has some tax-free growth. Your contributions grow tax deferred and withdrawals are completely tax-free if they're used for qualified education expenses. And the list for qualified education expenses is pretty large. So it could be for laptops, books, supplies, things like that. You do get state tax deductions depending on your state. Depends on your state, though. So pause. It depends on your state. If your state doesn't charge income tax, for the state, then there's not a state tax deduction, of course. But if it does, you may get a state income tax deduction or a credit for the contributions. It's not massive, so I wouldn't say that this is an incredible tax savings vehicle at all, but the benefits of the tax-free growth is really beneficial. There are pretty high contribution limits. You can put in a lot of money, well over 300,000 in some states, which is really great for high earners. And it's a great way to give to family members, kids, without creeping into some of the gift tax issues. And another positive is the control stays with you as the person who's opened the account. Even though the account is for your child, you remain the owner, you remain in control of what it's invested in, how you could take money out. Now let's talk about the cons. There's limited investment flexibility. And what I mean by this is your choices are limited to the plan's investment options. Every state has their own list of investment options. Most of the time you'll see some target date funds, which I think are pretty appropriate for a 529 plan. You can line that date up with when your kid plans on going through school. Another con, though, is there's penalties for non-qualified withdrawals. And this is what I think scares people away from 529s initially. If you take money out for something other than qualified education expenses, you pay not only the income tax that you saved if you did, and you also pay a 10% penalty on the earnings. So sometimes that can hurt a little bit if you're looking at the nice earnings that it's gained over time. Another negative is there is a financial aid impact. It does count as a parental asset on the FAFSA form, which could slightly reduce the financial aid eligibility, although it's not a deal breaker for high income earning families. And I will say 529 plans have a much, much lower impact on the estimated financial contribution amount that they're looking at you for, it has a lesser impact than cash or that than a brokerage account does from you as the parent. And it definitely has a lower impact than what assets your student may have in their own checking, in their own savings account, and their own brokerage accounts. So 529s, do they affect FAFSA and how much you may be deemed as eligible to pay? Yes, technically yes, but not as bad as you would think. Now let's talk about some creative uses for a 529. Here's what most people don't know. 529s aren't just for tuition. You can use them for K through 12 tuition up to $10,000 a year. You can use them for apprenticeships or apprenticeship programs if they're registered with the Department of Labor. So that would be important to check out. You could also use them for student loan repayment up to $10,000 per beneficiary, which is huge if your child does end up graduating with a little bit of debt. Changing beneficiaries, this is an important one. You can change the beneficiary of a 529. You can switch to a sibling, a cousin, or even use it for continuing your own education. So it starts out as having a beneficiary as one of your children or all of your children, but you can change that beneficiary over time if you're not using all of the funds for that particular child. This flexibility can make a 529 more surprisingly versatile than maybe some might think. But let's talk about option 2, which is just a simple brokerage account, a non-retirement investment account. There's some pros and cons, of course. So the pros here, there's no withdrawal restrictions. You can use the money for anything, for college, a house down payment, a business venture for your kids. You can use it literally for anything. So it's not limited to the cost of attendance or those expenses that come with college. There are wider investment options. You get to choose stocks, ETFs, mutual funds, even individual bonds. You're not just limited to maybe some of the target date funds or the pre-built mutual funds that they have within your state's plan. There's no penalties for non-education use. So again, stays super flexible. But let's talk about the negatives. There are no tax breaks. So if you contribute to a brokerage account, you're going to pay capital gain taxes on your investment earnings year over year. So you'd want to make sure that the account is tax efficient by either tax loss harvesting or making sure that the underlying investments themselves are tax efficient. There is still a financial aid impact. It still counts as a parental asset, which again is a little more impactful than a 529 account and definitely more impactful if it's under the name of the student. There's also just the temptation to spend the money because it's not specifically technically earmarked for education. It's easier to maybe spend on something else. So where might this apply? Well, let's say you're a veterinarian, you've got variable income, and you're not sure if your kids will go to college. A brokerage account gives you a lot of flexibility, but you'll give up some of those tax advantages that we talked about on the 529 side of things. Some key considerations. How do you choose between the two? Well, there are 3 big questions I would say to ask yourself. Number 1 is certainty. How confident are you that your child will pursue higher education? Is this something that you guys have been chatting about since they were younger? Is this a dream of theirs already that you know about? Number 2, tax situation. Are you in a high state tax bracket where a deduction could make a bigger impact? Do you prefer to have tax benefits or tax-free growth when it comes to the money that you're putting into this account for your child? And number 3, your other goals that you may have. Are you already maxed out on retirement savings? Are you paying down your own student loans? If not, you may want to prioritize those goals first because remember, we can take loans out for school for our kids. We cannot take loans out for our own retirement. And your financial independence is certainly very valuable, especially if you're trying to avoid living with your kids in the future because you've run out of money. So focus on your own retirement, your own debt pay down plans first. And if we've got those in a good space, not to say that the loans are all paid off or you have retirement fully funded, but if we've got a good pace and we're working towards a good timeline on that side of things for you, great. Then let's start saving for college for our kids. Many of our clients at SLP Wealth actually do a combination of putting money in a 529 to capture some of the tax benefits, and then they let the rest grow in a brokerage account for more flexibility. So that's a very appropriate approach as well if you wanted to have even more flexibility, which I love in financial planning. Saving for your kids' future can feel super overwhelming, but you don't have to figure it all out alone. If you're a high income professional with student loans and you want a customized plan that balances paying off debt, but also saving for retirement and your kids' education, that's exactly what we do here at SLP Wealth. You can learn more about us, what our process looks like, what our services are, our scope of services, to see how we can help you live the dreams that you have for yourselves and for your family. And check that out in the description below. But thanks for hanging out with me. I'll catch you on the next one.